His birth date is 13th of October. And his burning desire is to make Imperial Money a 10,000 crore company. And his keys to success are discipline, commitment, and hard work. Over to you.
Go ahead, sir. Please start, sir.
Thank you, sir. Good morning, all.
Good morning.
So today we are not going to speak about the product presentation because most of the people are knowing about the products. Today we are going to speak something different, and then why actually I told a lot of times to everyone that I am looking the India as a bull market, and so many times even you people are also knowing it that India is a bull market. But we should know that why India is a bull market, right? Agree, not agree? Yes. So let's understand that why India is a bull market. Today this is one data which is saying, what this data is saying that the FIIs are now coming back. So if you can see this data, the July 22, the FIIs were not there in India, and now 1, 2, 3, 4, 5, 6, 7, and 9, these are the months where FIIs were not there, but now they are coming slowly. But still, the FIIs are in India at the lowest pace of its time. So normal average level of the FIIs holding in India is around 19%. At this point of time, it is only 16%, which is almost around, you can say, 17 years low. And that says that the FI is going to come once the bond yield is going to go down of the US market. A second very important aspect, you see this gold, not many people are having gold interest nowadays, but if you see this 71 to 24, the gold has the average returns of only 8%. I believe the gold rally is still there, and the silver rally is around, you can say, CAGR 5.6%. At this point of time, the gold and silver is rolling around, but I believe down the line, next couple of months, probably it will get lower down. I think the third important issue is the number of firms reporting the losses at the record low. So if you see this data, the large cap, mid cap, and small cap is the three. This 𝐿𝐴 hai yahan pe. And if you see this point of time, that is FY24, the large cap, mid cap, and small cap companies are showing the lowest losses as a number of firms, and that shows that the losses are making the companies on the most lowest pace. That means the more the companies are basically presenting the profits, right? And this is the all-time. You can see this is all the IMARA. This is the all-time. So this again signifies that how the companies in India are reporting the profits across the length and breadth. It is not only one segment. It is not only large cap or the small cap or the mid cap. It is across large, mid, and small. And this shows that why India will grow to the next level. Third very important point is again the PAT growth is showing the very important data. What is the PAT growth? The profit after tax. This is outpacing the nominal GDP in its best ratings. So normally यहाँ पे देखिए अगर आप देखेंगे 50% से बहुत ज़्यादा कंपनीज जो है वो नॉमिनल जीडीपी से ज़्यादा रिपोर्ट प्रॉफिट अपना कर रही है, which did not happen in last couple of years, right? So this is another data which is saying that this will get a new trajectory of the profits of the companies, which will lead to the more better EPS, more better earning, and the more better you can say the PAT over the period of time with the large cap, small cap, mid cap, all kind of companies. This is another very important data, which is because my business is of data, because I understand only data, right? And that is how actually market works out, right? So this is another point. What is a Standard & Poor 500 index earnings minus US Treasury bonds 10 years का जो G-Sec रहता है US का, उसको अगर मैं माइनस करता हूँ तो मुझे एक चीज समझ में आती है कि मैं अगर इक्विटीज में पैसा लगा रहा हूँ तो उसका मेरा रिस्क कितना है. And that terminology called as equity risk premium, and this is says the equity risk premium has evaporated. What is evaporated? That the risk, the person who is actually investing in India, who feels that equity are having the risk. But when on the charts, when you calculate, you're going to come across that the equity risk premium, your risk premium is lowering down. And when risk premium is lowering down, that means actually your money is going on a very lower risk asset, wherein there is a lot of probabilities wherein you will need to make the money out. Right? So this is very important chart. You will see this when this is a 2008, this is 2012, and this is 2020. So this is, if you can see, this is a one line. You can just draw here. We are at the bottom length of the risk premium. So we don't have risk at this point of time. Anybody can really invest the money in India, and believe me, it is like lot many people are speaking about the corrections आएगा, ये आएगा, वो आएगा, and we spoke across the length and breadth, and a lot of social media speaking about it, right? But believe me, the kind of earnings what actually India is having, It's a great earnings what we have across the globe, and that's how actually this equity risk premium chart is showing that where actually we have the risk or not. So even if you can say in my case, the India case, the lower side I expect only 5%, you can say the lower down the market or 7%, not more than that, but the upper side limits is not less than 30-40%. So that is how actually India is poised at this point of time. Another point is basically you can see this, a lot of people are speaking about here, ये 4 different index है. What is this? This is basically Nifty 50 है, ये Nifty next 50 है, ये Nifty 50 है, Nifty small cap है, Nifty small cap, Nifty mid cap. Now you can see this, a lot of people are only speaking about the Nifty small cap, Nifty mid cap or Nifty itself. But we can see this Nifty next 50 is giving the highest returns in last 2001 to 2024. It's last 24 years, and the people are not really calculating the Nifty next 50. I would request next time whenever you speak about the investing, speak about the Nifty next 50. And that is something really great. This is another data which I hadn't generated out of it. This is all about India. So this is the real estate, this is infrastructure, this is, you can say, the manufacturing, healthcare, automobile, and you can say the financial services. So India is these are the 6 terminologies wherein I believe that India will going to get progress over the period of time, next 10 to 12 years. So it's growing. India has a growing need for spaces, and this is a real fact. That is how actually real estate we are very bullish on it. But we are bullish on real estate per se, the real estate companies. Not precisely buying the flats. Thank you very much. Not precisely buying the flats. But his flats you can certainly buy because my friend is here. But even invest in his company also. Because you are going to get any more profit when you don't invest in his company. Right. Another opportunity is this is like banks, FMCGs, NBFCs and insurance companies. These are the companies which are reporting a lot of profits. And these profits will certainly you will not get it in your portfolio. Another point is infrastructure. There is a multi-year bull market I expect into the infrastructure companies in India, and believe me, this will going to make the huge numbers in the profits in the portfolio. So this is a lot of opportunity in infrastructure. This is very important chart, and why this important chart? Because investing competence is all about speaking. When we know nothing, we actually don't invest anything. When we do so many things in market thing here, we invest here and then again we come down here. But believe me, we should know that where the market is, where the valuations are, and when we do that, we certainly land up with a good profit. Another very analogy of this again today's presentation is the attention. What gets the attention is rarely valuable. This is very important terminology of investing, or even whatever the business which we run out of it. When you run your own business also, this terminology is very important. That your financial plan is most important because this adds the value. If you are having the absolute proper in place financial plan, that will going to get the added huge value. Market history will going to play some role, but it hardly. Your today's headline will going to play some role, but it hardly. Or the daily market moments will going to play the role, but it hardly matters for you. What is most important matters for you or for your portfolio is the what the plan what you have in the portfolio is that portfolio is into place or not. And believe me, my dear friends, if your portfolio is absolutely in place, certainly you're going to make huge money out of it. Thank you very much for the patient listening. Thanks.